Good morning and welcome to the Orlando Real Estate Buzz. I'm Brenden Rendo with the Homes in Orlando team and joined as always by our good friend, Joseph Dionne. Hey, Nick.
Hey, he's sneaking away.
of Appli Home Loans.
He's like, I don't want to hear today's conversation. Woo!
No, he probably does not. This is kind of actually good because last week we originally talked about the roller coaster rates, and we're rolling back up.
Like I always laugh, like, and we're here in Orlando, and the old school roller coasters where it's like the chugga, and it slowly goes up to the top, and then you have like the Hulk roller coaster where it just shoots you right at the top, like from the bottom all the way up. Which one do you feel like we're always on right now? Like anytime we're going up.
This week we're on the Hulk. We are literally on the Hulk. I mean, we just you sent me the economic news calendar for the week.
Yep.
And I'm sitting there looking at it going, shit. It's gonna drive us. It's either gonna push us down real quick or it's gonna shoot us back up real quick. Mm-hmm. And what happened? Shot us back up real quick. I mean, when we sit and look at the headlines, it was just, Tuesday, consumer price index comes out.
Yep.
And we're still sitting at 6.4%, which is way off the Fed's target of 2%. Just a little bit, And when you looked at it, the inside numbers, everything actually went up. Mm-hmm. But the rate came down. It was like, how does that one work? I mean, we're off our peak. Our peak was where did we peak at? Like 8.2, 8.4?
Yeah, it was like 8. I think it was 8.4.
Okay.
And yeah, so we're off, which is great, but we're not seeing a steady decline.
No, not at all. And we had a lot of people talking happy news like a week and a half ago. Yeah, Fed's pivoting, boom, boom, boom. This is what the Chicago head of the Cleveland Fed said. She's pushing for another 0.5 point hike.
Yeah.
So I don't think their pivot means what they think pivot means.
Just when we saw that quarter, you know what it almost feels like? It almost feels like they knew these numbers were going to be as good as what they needed to be, so they gave us a little reprieve on the last hike. Yeah,
exactly. And then this morning, we got the PPI numbers, the producers price index. They had estimated it coming in at 0.4. I want to be an expert, by the way. When I grow up next life, I'm going to be an expert, just so I can be wrong and still get paid. And it came in at 0.7.
They're only off by 0.3. Come on, that was pretty close.
Yeah. I mean, what a great job. Either a meteorologist or an economist. Which one?
Which one? Because
you can be totally wrong either direction, and you still make money. It's just it's not fair.
Yep.
But I mean, and the market this morning futures just took a dive.
Yeah.
Took an absolute dive. And then the 10-year T this morning. Ouch. It took a huge jump. We're up to where are we right now? 3.83. So this is just since Monday, the 13th on Monday.
Yep.
We're sitting down here at roughly 3.7, and we've jumped to 3.86.
Yep.
So in the past 2 weeks, we've seen what? Almost a 0.5 point jump?
Pretty close.
Somewhere in there.
Mm-hmm.
So your baseline is probably what? About 6.75, somewhere in that ballpark?
Yeah, I mean, it's at that point where you're top tier now, like top tier client, like we're talking like that super sexy scenario where it's buying $400,000 home, putting 30% down, 800 credit score. That's your 6.75.
That's your 6.75.
And like everybody else, if you're not that scenario, you're going to be higher than that right now. Guarantee it.
You're just going to get hit.
And,
I mean,
and you may find, and here's the thing, there's going to be investors that are going to be hurting right now, that are hurting. There's a lot already hurting. And you're going to see rates kind of like, you're going to see people take it, and you're going to see a little bit more aggressive rates here and there. But those are companies that, we're still seeing it. We're seeing mortgage companies. I think Capital Mortgage, which is a fairly medium-sized mortgage company nationally, just closed their doors. Like, you're seeing a lot of stuff. Like, we're still getting these type of news data because a lot of these companies, there's so much overhead, and to be competitive, they've been trying to get rates because they're just trying to undercut so they can keep revenue coming in, but they're not generating enough. Like,
their margins
finally they sit there and say, if the market does something like this, they go, crap, we can't do it any longer.
Yep.
So I think you're going to continue to see that type of data and news coming out where, a lot of the big players are out. I was laughing. You saw Jay Farner with Rocket. He announced his retirement plan, or he's going to be stepping out. And I was like, boy, picked a good time to decide to step out.
Yeah, that might be a good time.
He's like, I've been through this roller coaster a few times already. I'm ready to retire.
That's enough. That is enough for me.
But it's going to be interesting, and it's continuing to keep us on our toes. Every time we think it's going to settle back down, it doesn't.
Yeah, and I think we're going to see that in the numbers too, because we had talked beginning of January when we pushed down into that 6% area.
Yep.
We felt it. We felt a sigh of relief from the buyers. I saw an influx of some buyers come back all of a sudden. I think we saw, and we'll see. I mean, again, we'll see in the numbers. We saw houses moving a little bit quicker again.
Yep.
People at open houses again. Are people now all of a sudden going to say, "Oh, no, going to pull back again and wait for rates to come back down again"? It's amazing. I mean, that 0.5%, when you're looking at a family with these days, a median income of $100,000, it stretches them.
Mm-hmm.
That couple extra $100 in payment, all of a sudden again prices them back out of that house.
Yep.
How many times have we worked with people who are, they're sitting there, you're running them through, and you're sitting at that 49.5% debt to income ratio, and you're praying that nothing changes before that closing. That they don't go out and actually spend a couple extra $100 on their credit card, so their payment goes up $30, and it literally just, when you do that final credit pull, all of a sudden, oh, whoops, we're too high.
Yeah. Exactly. Or that insurance quote changes last second because the agent quoted extra premiums to try to win the deal, and then we get the 4 point and no longer is it valid.
Yes.
We've seen those a time or two. I laugh, like we've got kind of like we're getting hit in so many different directions with like insurance costs going up exorbitantly. We've got the inflation. We've got rates are like, you have all these different things. Market costs, like values are so much higher than where they were 3 years ago. We're used to that now, but Florida's just been such an interesting environment. Like, we still have so many people moving to Florida that even with all of this stuff going on, we haven't seen the massive impact that I would expect to have seen.
Yeah. We keep going. You keep going back to those national numbers, and you get the news, coming out every week. With January numbers here for San Francisco, for San Diego, for Idaho, Austin. Oh my gosh, Austin, Texas, which was one of the top 3 markets.
Yeah.
Got a gentleman I know over there, and it's just crashed.
Oh,
I mean,
man.
they are down 20-25%, somewhere in that ballpark. It is just, you want to talk about doing a 180 and, hitting the top of that roller coaster, and you're just slamming down, picking up speed.
Mm-hmm.
And I feel very fortunate, that we are in a little bit more stable market. Does it make you a little uneasy? Yeah, because like everyone, kind of like that steadiness, but it is what it is. You learn to ride with it,
Mm-hmm.
and just try and stay on top of the numbers so you can let people know, hey, this is what's happening.
Yeah.
And if I think you look at some of the other economic numbers, the manufacturing number has taken a dive. So what the Fed is doing is working. It's just not showing up in the numbers yet.
Yeah.
And that's the part that's kind of nerve-wracking, because it's like, can they, which they've never been able to before, can they provide a soft landing for the economy? That, can they time it right? Can they hit it? Okay, we are going to do another half a point, but a lot of that stuff doesn't hit for 6 months down the road.
Mm-hmm.
Is that September or October? Is that when we see the unemployment numbers really take a spike?
Yeah. We'll have to see.
Yeah. We'll have to see. But when we jump back into the numbers here in Orlando, we had talked about, let's see if that 407 number holds up, or if we do pull back. Well, yeah, we did pull back, but we pulled back to 300, where the previous couple of weeks we were sitting in the low twos.
Mm-hmm.
So we've seen the number jump, which is kind of what I expected, simply because we did have that pullback in the rates at that 6%. And then again, our inventory keeps decreasing. And as long as that inventory keeps decreasing, the prices are going to hold.
Mm-hmm.
Same thing with the condos. The number of condo and townhome sales pulled back, but didn't pull back to the previous levels. Mm-hmm. It was a little bit better. And our inventory decreased again. So that tight inventory is helping to hold things up. And then this was interesting, because over the past couple of reports that we've done, we saw that original list to sales price, we saw it down as low as 90%.
Mm-hmm.
And we saw this down, I think, as low as 92%, the final list to sales price.
Yeah.
So with more buyers in that early January coming back onto the market, the sellers didn't have to give as much away as they previously had. They didn't have to discount as much. And that's why we saw the days on market shrink. So we see here our median price, where we had stayed steady, we picked up a little bit, which makes sense with the more buyers on the market.
Yep.
The less discount than we had. And here's our chart on the weekly sales numbers. Again, we're not down here, we're back up here.
Yeah.
And I think over the next probably 2 to 3 weeks through the end of February, as those January pendings come to closing, I think we're going to hold higher at this number than we had previously.
Yep.
But now with the rates jumping back up, does it make it a softer March going into the spring season?
Exactly. That's what's going to be interesting, is we now have that. And I'm thinking back to last year. March was a very weird year last year, right? Like, because we almost had like this exact thing that we just saw today, and with all this data, was starting for the first time last year, but we saw much bigger jumps, right? Mm-hmm. It was March, April last year where it's like, holy crap, rates are weird, right? And are we going to see something similar this year? I don't know. I don't think we will, because we're already a little bit higher. But I think it's going to be interesting to see how all this plays out over the next couple. I think we will see a little bit, those headwinds of, you've got buying season really coming upon us with that springtime in Florida. And then you've got the headwinds of higher rates. So what's going to happen?
Yeah, you got two forces coming like this, opposite forces coming.
Yep.
How are they going to bang together, and which one's going to push the other one, and win the tug of war? Really is kind of what it's like. And then you see our days on market, we dropped, was that 6 days on average, which again, more buyers out on the market, lower inventory. This should decrease. And I'm expecting this to probably decrease again over the next couple of weeks. But then I think we're going to start going back up. And this is one of the things that every seller needs to be aware of and needs to keep an eye on. This trend is this continual decrease in the inventory.
Yep.
This is going to help keep your price up. This will help keep your price up.
Yep.
Because a lot of those houses, just either overpriced or, if you're going to have to go at the 6.75, you're going to make sure you're getting every penny and everything you want. So you're not just going to go in and throw offers out there.
Exactly.
Like had previously been done.
Correct.
Yeah. Then we kind of see the same thing here with the condos. Again, 97. We're about 2 points higher than we have been over the past 2 weeks. So that's really it's kind of interesting because we really have two colliding market dynamics going on right now.
Yeah.
And it's anyone's guess on where it goes. If we come out next month and we find our CPI number dropping into the 5s, we'll see, we'll see, I think we'll see the rates come back down.
Yep.
But as long as we hold steady at that 6%, that's way above where the Fed wants to be.
Yep.
Then they're going to continue to push the overnight rate up, which of course is going to push the T-bill up as well. So
we'll have to see.
Dynamic. One that we have to keep our eye on and be prepared for when we get that, when one of them wins.
Exactly.
So
we'll see.
Keep an eye on it for you, and we'll keep you updated on a weekly basis. Thanks for joining us. Thanks again this morning, Joe. Enjoyed it. Take care. If you're on Facebook, please like. If you're on YouTube, please hit the subscribe button. Give us the thumbs up. Look forward to seeing you guys all again next Thursday.